Well, good morning, everyone. Welcome to our Thursday morning trading session. Just a moment while I get the screen share going for you. So after sitting with the trade all day yesterday, today the market makes a huge move lower. Huge. Well, actually, it came after hours because of the FOMC report that came out. Right around here, just after the market close, and boom, down she goes. Don't know if it's down for the count, though. We were talking about this just the other day, how the stock market tends to reset in the fall, around October. There's normally a little bit of a move against what's normally a fairly bullish market. Oh, before I get too far along, just a real quick recap. I see there's a couple new names in the room here this morning. Welcome. I hope you'll feel free to ask questions or request markets. What you're looking at is the diversified trading system, and the way I have it set up is I have the Hawk Scalper here on the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. The charts you're looking at here are the NASDAQ. I'm also following soybeans and crude oil. Although I think it's almost time to mix up the soybean market for something else. All right, maybe it's time to dip our toe in the water. We're getting a first micro-macro cross signal here on the Hawk. It's printing right near these lows, which is a little bit of a concern because the market may well be going sideways. Oh, good. It's into yellow bars. I don't need to worry about it. Obviously, there is a huge opening gap above the market, considering the market left off. Where did it leave off? Up here, around 48.15, 48.17, give or take. And it's opening down here around the 47.80 mark. So big gap above the market. I don't know whether they're going to try to get in there today or if this is going to serve to be more of an acceleration gap. I'll have to sit with it for a little bit. The other thing we could do, we looked at this during the demo room yesterday. When you have a market that's decidedly sideways like this, you can always use your OCO order as well. You can place an OCO to buy above and to short below. It's essentially just a bracket trade. You want to make sure you're not too tight to these prices, however, because they will have a tendency just to break out by a tick or two, only to reverse, and you sure don't want to be buying just on a one tick breakout. Ask me how I know. All right, so we've got a bracket trade in order here on the Eagle. Everything else still very sideways. The Hawk, you can see a lot of yellow bars printing at more or less the same price level. So if you throw a line through there, traders have a word for the market when it's like this. They call it barbed wire. And the reason should be fairly obvious. And and the end result of playing with it is usually the same as playing with barbed wire, depending how heavily invested you get in it. It may even be more painful than playing with barbed wire. All right, getting a signal now here on the Falcon. I'm looking for a signal to try, just to test the water, to see whether the market is in a buy mode or in a sell mode. We're working on a late filter entry signal right now on the Falcon. We just have the warning dot. The signal's not complete. You see it keeps flip-flopping back and forth here. I'm going to set up the trade, and then I'm going to explain it, and I'm probably going to do it like that. All right. So the late filter entry signal, this is also a trend change signal. And what we have is we have a trend line changing color, going from green to red. We have this characteristic little down, up, down pattern. We are making a lower high, which is good. That's what we would like to see. So this first leg changes the trend line color. This second leg is the buyers trying to fight the market back. And the third leg, the one with the signal, is the one that shows the sellers are trying to take control of the market. The late filter entry signal occurs when the filter goes out of sync and comes back into sync, but the trend line never changes color. That's a fairly high probability signal. It is still fairly early in the day though, but we'll give it a go and we'll see whether or not the market has any directionality to it. Just making a couple notes in my journal. So they're starting to struggle again off of these lows. You can see the market hit the primary support line right on the number during the night. Bounced up, played with the median line for a little bit. And now it's trying to head lower again. So no real surprise that we're seeing some buying coming in off of these lows. There's a lot of traders who are still seeing this as a trading range. And in a typical trading range, there's two strategies. One group of traders is going to buy the bottom end of the trading range. The other group of traders is going to sell the top end of the trading range. It kind of leaves the middle here as no man's land. So we're actually looking for a breakout here because we're selling where a lot of traders are trying to buy, and that's what you see happen right now. The safest way to trade a trading range is to allow the market to actually break out of the range. Once it breaks out, it will retest, and then once it retests, you look for that new signal to prove that the market can stay outside of the trading range. The opposite would be true to the upside. You allow the market to break out, retest, and then produce a signal. But we're going with our DTS signal here, and so far we're holding our own. If we can get below this low here, we should see a little bit of follow through on the sell. I'm tempted to try to run this one out, but you know what? I think I'll take the profit when I have it, if they give it to me. So we hit our break-even trigger. There we go. All right, we hit our break-even trigger. Trade Manager took our stops down to break-even, and we have since hit our profit objective. Hooray for us. so we also got filled on the breakout here with the Eagle. And the Eagle, coincidentally, just around the open here, also produced a green bar sell signal. So we'll see now how this breakout play works. We should get a stop in order here. It's a little cozy, but we'll start with that. So if you're going to try trading a breakout of a channel, you need to be aware of that reaction to the breakout. Remember what I was just showing you? So we've got this trading range. The market's going to try to break out. It's going to retest. So long as it stays outside of the trading range, it can drift in a little bit, that's okay. But it needs to stay outside of the trading range. If it drifts all the way back here, say to the middle of the trading range, remember I said that was no man's land. But if it stays toward the bottom end here of the trading range and comes out and produces another sell signal, then that's a fairly high probability trade to take. The problem with trading breakouts, and this is probably a bad time for me to mention this, is that most breakouts fail. I think it's something like 75% of all breakout attempts fail. And you can see that was the case here as well. As the sideways range started going, we had a bottom. Here, let's use this tool. We had a bottom right here. We had a top right here. This breakout attempt failed. This one didn't actually get a chance to break out, but it's essentially the same thing. It broke out above the high here, trying to get out, failed. This breakout failed. This breakout failed. This breakout, well, almost failed, arguably. Had I taken the green bar sell or the with trend signal here, the hard edge bounce, I think we could be pretty close to our profit objective, especially off the green bar sell. Yeah, we'd have our break even hit, and we would currently be at or just a few ticks above our profit objective. That's right, we'll stay with this one a little bit. We'll see if we can't coax it into a profitable position. In the meantime, you Raptor traders, let's see. It's a bit of a mess, isn't it? Where did we open? We opened right here. So if you kind of, well, I don't want to say disregard the overnight, but out of the morning session, we did have a quick little double pullback that allowed you to short. So this is pullback 1, there's the signal, there's pullback 2 into the hard edge, into the cloud, and then the market comes out with signal number 2. That's your double pullback signal. And fairly decent progression lower. Soybeans in a little bit of a downtrend still from yesterday. The market waffling a little bit. until the afternoon when the World Agricultural Supply and Demand exports or estimates were released, and we got this great big trend change signal. Honestly, that would have been a little bit scary to take because we did not get a real good test of the extreme here. However, this unfolded within the span of about 5 minutes. And then about 10 minutes later, we got this sell signal. So even though it's not the traditional test of the extreme that we're looking at, it's still, well, if you didn't feel like taking the signal on the eagle, I was going to say it's still a trend change signal. If you didn't feel like taking the signal on the eagle, you could certainly take it on the hawk or the falcon, which were also producing signals. Crude oil a little bit sideways. Here's crude now on the hawk, and you can see we're starting to get a little congestion. We're getting lower highs, perhaps higher lows. So we're kind of consolidating here a little bit, going a little sideways. We've got a red bar buy signal. If you were really anxious to get in early on a crude trade, you could look to short that red bar buy. That's the signal right here. You could look to sell it and take it down here to the lows for a quick little scalp. It's not a bad scenario because, here, let's put this back on the shelf for now. Because here on the eagle, we're also into the hard edge. This is the eagle on crude oil. And it appears as though we have a little bit of a sideways range here as well. We're at the top end of the range. We're producing green bar sells. So a high probability signal near a top end of a trading range, which is where a lot of traders will be selling. And we're against the ATR, which is unfortunate, but it is a scalp, so hopefully we can get in and out without too much difficulty. All right, let's put that away. Let's see how our NASDAQ trade is doing. All right, I'm getting a little bit anxious here, so we seem to be holding on these lows around the 47.70 area. So I'm going to bring my stop in. If they don't get it in gear from here, well then I'm going to take my toys and go somewhere else. All right, there we go. And now we're down to break even. I'm going to continue with the bar high-low strategy. It's a little bit more aggressive. Let's see where the parabolics are at. No, I'll stay with it. We're just a couple of ticks inside our short order, so we're essentially at break even. Parabolics would be keeping us back a little bit more. But I'll take the break even stop out if they fail. No, they're going to tag me here in a second. Scoundrels. Come on, sellers, where'd you go? They're trying. They're trying really hard. come on. Okay, so we hit our break even and we're still running that aggressive stop. Trying to capture as much open profit as we can. While I have everybody in the room, this would be a good time to mention, here in the Pacific Northwest, apparently we're catching the tail end of some typhoon in the Pacific Ocean, and the weatherman's been warning us that we've got 3 storms heading our way back to back. The first one hit last night. It was very mild compared to what they were forecasting. They were forecasting high winds, lots of rain, and threatening power outages and whatnot. We've still got 2 storms to go. So if you log on tomorrow morning and I'm not here, it's probably because the second storm is a little bit more violent and it's knocked out my power. So don't panic. I haven't forgotten. You haven't done anything wrong. It's just a storm. But if it's anything like this one, we're just getting a lot of rain, which will be good for the rivers. It is rain season after all. The rivers need to fill up so the salmon can spawn. All right, getting a little hesitation here now. How are we doing on this particular trade? Oh, not too bad. Not too bad for a little breakout trade. I think it's safe to say the market is definitely in a downtrend. So the bar high low strategy that I'm using here you can compare it against the parabolics. I don't know how well you can make out those hash marks. The parabolics just a little less aggressive. Of course, I can set the bar high low wherever I would like. I can set it a couple bars further back, but we'll make it a little bit tighter still. Usually 2 bars back gives you a reasonable amount of staying power. It allows the market to move against you a little bit, and whether you choose to do a 2 or 3 tick or even a 1 tick offset, that's entirely up to you, of course. But if you're anxious about maintaining as much open profit as possible, then you can see the bar high low strategy is the one for you. So currently, if I close this out, we have about $300 in profit. The bar high low strategy has locked in about $230. So we're playing with about $70 risk. And somewhere through here, let's see, they've been falling since the open. What time is it now? It's almost the top end of our opening range, the top of the hour. So we've been falling off for a half an hour. It is reasonable to suspect that the market is going to dig its heels in here pretty quick, and the buyers are going to try to rally, maybe. Come on. Don't stop now. You're doing good. People sometimes, I've had people ask me, do you ever feel bad about shorting the stock market? Because, of course, we're shorting American industry here on the NQ, but more indirectly North American industry. And the answer I always give is no. I don't have any control over the management of these companies. And as a rule of thumb, the stock market will recover from any short. About the only time the stock market truly unwound was back in 1929 when the market crashed, literally crashed. All right, so good little trade there. Let's see, how did we do on that one anyway? All right, that's okay. Okay, just a moment here. I'm making a couple notes in my journal. All right, so we're kind of on hold now until we get another signal printing. Just taking a look here what's going on in crude oil again. Oh, I guess crude oil did fill us here on the hawk trade. on the breakdown here from the red bar buy signal. Sorry, I'm stumbling over my words here this morning. And we're working our way down here to our profit target. Looks like we should be able to reach that. The market's slipping a little bit, and the nice thing about scalping, of course, oh, well, there we go. We just hit our profit objective. Nice thing about scalping, of course, is that the targets are always nearby, and it takes a lot of pressure out of the trade. Wow, looks like I could have held on to that crude oil trade a little bit longer. Here's crude oil on the hawk, and this was our trade. It looks something like this. So we're challenging now the lows. And we can kind of shoot a trend line across there. It looks like we might see a reaction around the 49.90 area, maybe, kind of. All right, we'll put that back on the shelf for now. Okay, so how are we doing here? Oh, well, while we were looking at the crude oil trade, we also had a macro pullback signal slash 4-arrow consolidation. Now we've had a couple of these print. We had one print back here. So the 4-arrow consolidation, when the market starts to move sideways, the best 4-arrow consolidations tend to have this type of bear flag shape to them, but sometimes they'll just end up moving sideways. You could see this one either way, this one doing the same thing. And we're going to get 4 signals, 1, 2, 3, and we want to go off that 4th signal. That's when we expect the momentum to come back into the market. That's why it's called a 4-arrow consolidation, a very, very strong signal. In fact, the only signal I'll take off of the yellow bar in the hawk. Both these 4-arrow consolidations were also comprised of a macro pullback signal. The macro pullback signal occurs when we go back to the macro line, the micro line changes color, and we look for some follow through. Now, as you know, we normally only see 2, sometimes 3 macro pullbacks within a trend. But we start to get a little bit leery after the second one, because you have to remember what this is showing you. This is showing you a market that's in a strong downtrend, but now all of a sudden it can pull back far enough that it actually changes some of the parameters of the trend. It's getting a little bit more bullish. Now, I don't think we're going to see a full-on reversal here. However, a move back to 47.68, 47.70, that's entirely possible. Remember, it was only a few minutes ago, about 15 minutes ago, the market was holding up here at 47.70. We weren't sure it was going to break down. So it looks like we may have found our support for the day around the 47.56 mark. They flinched a little bit. The line was forecast around the 47.52-ish area, and they bottomed out at 47.54 half. Okay, the hawk now moving into yellow bars, kind of confirming what we've been looking at here. I would imagine a pullback to the hard edge is going to be likely. Raptor traders, you might get a soft edge buy signal. Now, with the soft edge buy, because it's a counter trend, as with all counter trend signals, there's two things you have to have. First, you have to have a trend. Okay, check. Second, you need to have a test of the extreme. In this case, the extremes are the low, and a subsequent failure. Well, even though this low here is lower than this low here, you could consider this a test of the extreme if we breach the high. Because that would confirm the failure. That would confirm that the sellers are losing their grip on the market, at least short term. Otherwise, what we would like to see is we would like to see a test of the extreme that comes up short, and then the market rallies. So if it gets out above this high and we produce a buy signal either here or here, well, there's the buy signal right there. That's your soft edge buy signal. I'm not going to take this one, but you could look to buy it back here to the hard edge. Stops need to go down below the low. Actually, you have a chance for a second push on this signal as well. Oh, what the heck here? We'll demo it. All right, so what we'll do is I'll just go in with a single because it's counter trend. The market is in a huge uptrend. So I'm going to look for a second push on the entry, namely, I've allowed the signal to engage. I've allowed the current bar to retreat from the breakout. So now I know the short-term limit of the buyers. So in order for me to become a buyer, I want to see some renewed momentum there. to see a failure now. This would be our test of the extreme. And if the market turns at this point and heads higher, well, then that's a pretty clear indication the sellers no longer have control of the marketplace. The Geiger counter is, I don't know if you saw it, it was pulling really heavy here to the short side. So if we don't get that bearish follow through, that tells us that the buyers have absorbed all that selling pressure and that in fact we could see an uptick. Okay, so far things looking a little bit more bullish. Get my stops ready. Oh, darn it. I hate these kinds of decisions. Go away! What we've got here is a double pullback signal. So the market's moved into the cloud. It's come out twice now with a sell signal. Now it hasn't engaged the signal just yet. But given these lows, I don't know if I want to enter right there or if I'd rather enter below here. I feel a little safer on the buy, truth be told. I feel a little bit safer trying to buy the market back here to 47.70, which is the hard edge. And I would probably be okay shorting below this low. All right, so they didn't test me on the double pullback, not yet anyways. All right, there we go. So we now have our retest of the low. There's our soft edge buy signal. And I'll enable my ups. Now we're looking for the buyers to give us some follow through on this. Come on, get up there. Got to breach this first hard edge. There we go, come on. All right, so we've hit our break-even target. I went in light just because of the huge downtrend. I didn't want to overcommit. I could have ran two contracts here, one with a profit objective, which we would have hit just now, or been very close to hitting. In fact, I think we need to see 47.67. It's stalled just a tick below what would have been our profit target. Yeah. So if we can see a trade through 47.67, we would have met our first profit objective. There we go. and now we would have a runner in play. And I think we'll get a little bit more aggressive here with our stops. Go with the parabolic strategy. If this is going to be a new trend, you can see the nice thing about the parabolic strategy is it gives the market a little bit of room to move when the trend first starts. And then when the trend starts to unwind, the parabolics come in very, very quickly. Now, as I mentioned, I don't imagine for a moment here we're going to see a full reversal, or even the market getting close to that opening gap. If we do, I may well fall off my chair. But we'll see here at 47.70 what happens. That was a very influential number before. A little bit of a flinch. 47.68. They're kind of starting to feel the resistance. A little bit of early selling. Trying to hold on. Come on. Don't make me get the magic mouse out. Alright, you're not leaving me any choice. Here, we're going to push it higher. The magic Magic Mouse still in beta, so you can write Adam, ask him when the release is out, but we're still in testing. I'm still waiting for somebody to write Adam and actually ask him about the Magic Mouse. He'll say, what? What are you talking about? All right, get up there. Come on. See? It works. Now, if you were considering or running multiple contracts, target here at 47.70 would be great. Oh, that's why crude's so choppy today. Thanks for the reminder, Floyd. Floyd says natural gas inventories at 7:30, crude at 8 o'clock. That's Pacific time, of course. Thank you for making that conversion for me, Floyd. So we'll take a look here at the natural gas market. Just load those charts up. Now, if you think watching a crude inventory report is wild, natural gas is crazy, like insanity. It's not going to be an easy one to bracket, though, unless we see the market retreat somewhere within the middle of this trading range. We've got a very nice trading range established. The lows here around 31.70, the highs around 32.24, 25. That's a great range, but in order to bracket it successfully, it would be nice if we saw the market trading perhaps around 31.90, even 32, before we tried to short it, or before we tried to bracket it. Okay, we've got a few minutes before that report comes out. We may have to go with plan B on the report, which is namely allow the report to release, see what kind of range is established, and it usually establishes pretty quickly, anywhere from 30 seconds to a minute or two after the report comes out. Rod's asking, do you set targets when you bracket? What are your targets? When you use the OCO function, unfortunately, you cannot preset targets. So, no, I usually just have a runner in. But I will go with a fairly aggressive stop strategy, like a parabolic, which if the market moves really quickly, hopefully the parabolic stop will get in tight enough that it will protect some of that open profit before a possible reversal. Our NASDAQ trade kind of chugging along here. We should see 47.70. But actually, Rod, in response to your question about targets, you know, you can just pick a dollar amount too. $300-400 is a pretty easy range for a market like crude or natural gas to make during an inventory release. You know what I've never tried, though, is a bracket trade on the Raptor. Because with the Raptor we have, well, not with the Raptor, but oftentimes with the Raptor we pair the Trailblazer. And what the Trailblazer allows you to do is it allows you to set your targets this way. So we have one contract, a 10-tick target. Let's make that like 50 ticks. And we should be able to buy the market, sell the market, and whichever side fills, we won't be able to cancel the other order. We'll have to cancel it manually, but it should give us an auto profit objective. So let's try that. Now this isn't, if you're looking for a real trade to follow, I would suggest letting the natural gas inventory report release and then look for the high and the low. And I'll point that out to you as we go. But let's give this a try. I'm curious to see how this will work, if it will work. So we've got a substantial profit target. Whichever side fills first should give me that 50-tick target. And I've also got my parabolics activated. And I'll have to manually cancel the other order. And no, I won't move now because the report's coming out in a matter of seconds. I think we got stopped out. I heard an order fill. I'm assuming that's the NASDAQ trade that got stopped on the break even, I believe. All right, here we go. The numbers are really small. We're going to see these numbers escalate really quickly here on the natural gas market. Wow. Okay, so we got filled to the upside. We have our parabolic stop, and we have our profit target. Come on, get up there. Get up there. Hooray! So you see, that was not very difficult for natural gas to reach that objective. Now that the report is out, however, we've got the high up here, we've got the low down here. We would wait for the market to consolidate a little bit. And then that would give you another range that you could bracket. I kind of like almost doing that better than the OCO function because you are able to set a profit target. Actually, you know what? I was wrong because with the OCO function, oh, and we did get stopped here at break even. Or was it break even? Yeah, break even. With the OCO function, so OCO stands for one cancels other, and we would place our orders manually on the chart like this. Now you need to remember these orders are live the moment you put them on your chart. So I tend to place them away and then pull them in. Now this isn't a real trade, so I'm going to keep them a little bit further away. But what you can do with this is you can turn your OCO off. And now you can manually place a profit target. And what will happen is, let's say we fill to the short side, the buy order will cancel, and you will have your profit target, profit-taking order in play. Oh, actually, come to think of it, I, I could just turn the OCO on again and make the second group of OCO orders my profit target. Oh, see, that's even a better idea. That way I don't need to worry about canceling this one. So let's say the market comes down and fills the sell order. The OCO function will automatically cancel that order right there. And then as the market heads down, if it hits our profit target, the OCO function will automatically cancel that open order up there. Well, I'm going to do that the next time, the next inventory. I don't know why I didn't think of that before. All right, so the NASDAQ just kind of flip-flopping right now, which I suppose is to be expected. Excuse me. Okay, we're getting a little bit of a reversal now. Okay, just making a couple notes here in my journal. Wow, that was a market really took off from there, didn't it? I guess I shouldn't have looked away. We had another retest here of the low right here on the Raptor. The market retesting the low, testing the extreme, failing to head lower, comes back and produces another soft edge buy signal. So that is a viable soft edge buy. Anytime you see a market test and fail, so they're trying to recover the downtrend, they failed, they're heading higher, they produce a signal that is a soft edge buy signal. So now we may actually be looking at a cloud crossover. Cloud crossover occurs, we expect the market to retreat into the cloud, and then for the cloud to push the market back out. Yeah, it can be a little bit tricky because it's counter trend. Keith says Good to know. I wondered about that soft edge buy, but I hesitated and didn't enter. The soft edge buy, anytime you see a counter trend signal, should always make you a little leery. Never go in too heavy on a counter trend signal, even on a high probability one like the soft edge buy. When you're trading counter trend or you're looking at a possible counter trend signal, you need to bear in mind what that signal is trying to tell you. It's showing you a market that is unable to regain the trend. See, the problem with a lot of counter trend signals is that when they're printing or when they're building, so we get a soft edge buy signal right here. At this point, it's nearly impossible to tell whether this is a soft or going to lead to a little bit of a rally, or whether it's going to break out of this bear flag. These little pullbacks are referred to as traders by flags, I suppose, because they look a little bit like a flag. A one in an uptrend, I suppose, looks more flaggish than the downtrend one. And so this would be considered a bull flag, and you would consider or expect the market to break up, and this is a bear flag, and you would expect the market to break down. So when you're getting these soft edge buy signals in a downtrend, you're wondering, well, is it really going to rally to the hard edge, or is it going to break out the bottom end of this flag? You don't really know, but we are playing the probability of the signal. It is a high probability signal. When we've had a downtrend, when we've retested the lows and it fails and comes back with a buy signal, there's a very good chance the market's going to try to get to that hard edge. So, it's a good reason to try it. Buy in. The only good thing about counter trend signals is you always know where to cover the trade. You cover the trade below the low, because if the market brings you in here and then reverses and goes back through the low, well then guess what? The downtrend is obviously not over. So that's the only good thing about a counter trend signal. But the soft edge buy is a high probability signal, so it's always worth trying. Just bear in mind it is counter trend, and as a result you should use a little discretion. Maybe not go in quite as heavy as you would on a with trend signal. You can always add to a position. Now, I was running my break-even trigger. We got tagged here on the break-even reversal, but the market came back, retested the low again, came back with another soft edge buy signal. Now, when the soft edge buy signal occurs near the hard edge like this, the hard edge is usually our first target, and this would hardly seem worthwhile. But when the signal produces near the hard edge, there's usually a greater follow-through, and that's what we're seeing right now. And now it's coming into the cloud. It's going to produce a cloud crossover signal, and that will give us a buy signal. I would really, really wish it didn't, though, just because that monster downtrend from the open. The buyers are firm at 47.54.55. The sellers seem to be knocking them down around the 47.77, 78 area. That might just end up being our trading range today. posted a couple of good trades. I would see no reason for trying to get any more out of it. Goes back to that quota thing, where if you have a smaller trade quota, you can choose to be picky. You can choose to hold out for the best signals. Alright, some of you are probably wondering about this macro pullback signal that we had here. Yes, it is a macro pullback signal. Where do you think we should cover it? See, the market went up so quickly, there's very little structure here. It's not to say it's not a viable signal. It is definitely a viable signal. Ideally, that's where we should cover it, way down there. And then as the market starts to uptick again, we can consider bringing our stops in quite a bit. That's always the issue when the market makes a quick move like that. Where do you end up covering the trade? As an alternative, you can think about placing your stop somewhere around halfway or 2/3 of the way back. Because that's kind of like the Fibonacci number. If the market's going to retrace, it's likely to retrace, well, anywhere from a third to a half to 2/3. It was actually Charles Dow who first noted that. I'm not sure how the Fibonacci numbers actually came into the trading arena. Some mathematician who was interested in trading probably figured, oh, well, the Fib numbers are close enough to the thirds that Charles Dow saw. The fellow for whom the Dow Jones is named. All right, well, we'll put that away for now. See, we're getting a few mixed signals through here. The hawk, definitely bullish, right? We've got macro pullback signals printing. The falcon, trying to get bullish. Our filter out of sync. The raptor, also trying to get bullish. We're waiting for a cloud crossover signal. The eagle, however, not so bullish yet. Technically, the band has, oops, uh-oh, I pushed the wrong button. Technically, hold on while I rebuild that chart. Technically, the band has flipped over. One second here. I can't multitask. I can't talk and build a chart at the same time. 1 second. And my wife will vouch for that. Okay, here we go. So I rebuilt the chart. Get everything lined up all neat and tidy. Okay. Technically, when we were looking at this before I closed up my chart, there we go. The band had turned bullish, just ever so slightly. But we don't want to micromanage these things, right? If it looks like it's in a downtrend, it's still in a downtrend. We're producing a possible green bar sell signal, or at least a warning dot. So even though technically the Eagle band is trying to get bullish, that would not be enough for me to go crazy and say, oh, well, we're bullish across the board. You're going to find that your best signals develop when the markets or your birds are more or less in sync. Now, like I said, that doesn't mean that the macro pullback signal won't actually materialize, but it does mean that you have to run a very, very deep stop to give this trade every opportunity. Now, for me, that's not, if I'm cherry picking a trade, that's not a cherry. Right? If I'm going to hold out and wait for 2 or 3 of what I consider to be the best signals of the day, that one doesn't qualify. I can get a better setup. Surely I can get a better setup than that sometime through the day. Right? Like even this macro pullback down here after this long extended move in the second macro pullback looks better than this macro pullback. Right? There's very little structure here that I can place a stop behind, and that's why we're drifting so low. The market is looking for buyers, and at the moment hasn't found any. Buyers are interested in buying down here at 47.55, 56, 57, and some are looking to buy at 47.63. But right now, not a whole lot of buyers supporting the market. And, you know, as is often the case when the market ends up making an abrupt move out of the open, there's a tendency for the market to want to go sideways for the rest of the session. So here we've got a first micro macro cross now on the hawk. Same kind of mess, but in reverse. Right? What if this is a bull flag and the market breaks out and moves higher? Is it a first micro macro cross? Yes, definitely. However, I may want to take steps to protect myself. The market is in limbo right now. Neither the buyers nor sellers seem to have a whole lot of control. There's my first micro macro cross. I know the buying came in here or the selling stopped here, however you want to take a look at it. So for my first micro macro cross, maybe I would choose to short below there so that I can cheat and, well, not really cheat, but get by with a tighter stop loss. If I'm going to take it right on the hash mark, well, I've got to do the opposite of this macro pullback signal and risk it all the way above the high. Not that that's a bad scenario, but this is the only way that I can possibly hang in this trade long enough to realize my profit target. the other alternative is to allow the signal to engage and look for that second push opportunity. So now you can short below there, and that too should allow you to get by with a slightly tighter stop loss. Now, the further we go here, as we produce a macro pullback or maybe a 4-arrow consolidation, the more this current leg, this one right here, is going to look like a test of the extreme, right? And if we fail to recover the uptrend from here, and the market stalls, and it's likely to reverse and head lower. See, so that's what we're seeing right now. So we've got 1, 2, 3. Here's signal number 4. It's in our 4-arrow consolidation. I probably would go in light. It's getting a little bit late in the morning. And I think I would definitely go all in, all out, because there is very, very active buying down here. If this turns out to be a trading range, it looks something like that. Well, again, we've got buyers down here around the bottom third. We've got sellers up here in the top third. We're kind of playing here in the middle. Oh, I guess I better get a... Oh, I do have my stop and play. Good. And I think that's going to be close enough for me to get this trade to a break-even situation. Oh, come on. There we go. See, we just came up short of the break-even target or trigger by a tick. So 7 ticks instead of 8. Again, my logic is that if we get 3/4 of the way to the profit target and we fail to hit the profit target, then go ahead, give me the break-even stop out. Now, sometimes I stop myself out too early. You've all seen me do it. If I have a trading fault, that sounds a little arrogant. We all have trading faults, but my trading Achilles heel, there we go, that's a good one. It's being a little bit too aggressive with my stops. Oh, and it looks like I did it again. Maybe. All right. Oh, yes. Thanks, Ken. Ken says crude oil inventory in 6 minutes time. Now, this is a nice range. This is a nice range to bracket. And what we'll do here is we'll use the OCO to buy above, and we'll sell below the low. So we've got this nice little range, and we would be looking for a breakout here. I'm going to toggle my OCO, and 49 will go here too. Let's take it down 2 zones. So we'll run a profit target right about there, and we'll go up 2 zones, 1, 2, we'll hit a profit target up here. So that's my second OCO, and I will enable my stops, and again I'll go with something a little bit more aggressive, like a parabolic stop. All right, we'll see how this one plays out. Crude oil, of course, has been very, very bullish. think we can expect crude oil to rally. I think long term it's definitely poised to rally. All right, here we go. Crude oil the report should hit the floor here in a moment. Well, I should have put the Geiger counter on. Oh well. According to the support and resistance suite, we're up above the median line, so the market does have a slightly bullish take on the day. Well, there we go. They're still stuck in the range. Support and resistance lines containing the market pretty well. And it's confirmed our bracket as well. All right, so we canceled the one order. The parabolics are in play now. I may move my break-even trigger just a little bit a ways. Not nearly the momentum we saw in the natural gas trade. Come on. Oh, I hope that wasn't a false breakout. We're producing some warning dots here, some green warning dots. Need to see the market take out the 49.90 area. Come on, get down there. Ooh, they're fighting that a little bit too hard. Come on. There we go. You can do it. Come on. Man, they're fighting for every tick. This is wild. Let's go. Okay, there. I know I'm playing with my stops again. I shouldn't do it. I'm going to sit on my hands now. couldn't have been that much of a surprise on the report because, like I said, the prices range pretty much stuck within that sideways trading range. And of course, it's never a bad idea to let your pocketbook be your guide. Actually, what I'll do is I'll bring this stop in a little bit. Oops. Shoot. Stop that. There's a little note to self. Don't mess around with your trades when you have them live. Okay, so I better close that out. Oh yeah. Okay, way to go, Eric. Um, so what happened there was, so we had our, shoot, I can't even, I messed up my trade manager. I have to reset it. To reset it, you go here to your F5. Shoot, would have hit the profit target. Oh no, it was the other side of the secondary support line. Okay, so what I did was I had my stop down here. Okay, we'll put it right here. And I tried to move it. Oh, well, it won't let me do it now. The chart will automatically resize itself, and I got a little bit crazy with it. What I needed to do was I needed to pull on this y-axis first. That brings up this little F in the top corner. I guess that's your auto format button. And that allows you to move your orders without the chart going crazy on you like it did in my instance. But when things don't work out, hit that close button. Get yourself out of trouble. That was a expensive little lesson. Better yet, don't touch your chart when you're in a trade. Don't touch it. All right, you guys and girls, we're going to wrap things up now, and I will see you again tomorrow morning. We'll talk to you then. Bye for now.